Welcome to today's What Moved the Market show. I'm your host Prem. It's Tuesday, December 2nd, 2025, and here is everything you need to know as the markets close for today. The Indian stock markets witnessed a session of correction today, continuing the weakness seen over the last 2 days. The Nifty 50 closed at 26,053, down by roughly 120 points, while the Sensex ended the day at 85,261. The Bank Nifty also faced significant pressure, closing at 59,500. The overall sentiment remained cautious as investors engaged in profit booking after recent record highs, dampening the mood across broader markets. On the currency front, the Indian rupee weakened slightly to close at 89.92 against the US dollar, facing pressure from foreign outflows and global dollar strength. Coming to the top movers, the bears clearly dominated the heavyweights today. The top losers included major names like HDFC Bank, ICICI Bank, Axis Bank, Reliance Industries and L&T, all of which fell more than 1%. This synchronized fall in heavyweights has been the primary reason for the Nifty's sudden weakness over the last 2 sessions. The decline is largely attributed to sustained selling by foreign institutional investors in the financial and energy sectors, coupled with the lack of fresh domestic buying triggers at these elevated valuations. On the positive side, Asian Paints and Infosys emerged as the top gainers, providing some cushion to the indices, driven by defensive buying in IT and falling raw material costs for paint companies. In the primary market, Mother Nutri Foods listed on the exchanges today, witnessing a volatile debut before settling near its issue price. In terms of key levels, the Nifty 50 tested the critical support zone of 26,000 today. It managed to hold this level by the close, but the repeated testing suggests underlying weakness. If this level breaks, traders should watch for 25,800. For Bank Nifty, the index tested support at 59,300. A breach below this could open the doors for a further slide toward 59,000, while resistance remains strong at 60,000. Sectorally, the banking and financial services sectors were the weakest performers, dragging the market down due to the heavy sell-off in private lenders. The media and metal sectors also saw declines. Conversely, the IT sector showed relative strength, acting as a defensive play amidst the broader volatility, while the pharma sector remained flat to marginally positive. On the regulatory front, markets are adjusting to the new SEBI Informal Guidance Scheme 2025, which became effective yesterday. This updated framework aims to provide faster and more transparent clarifications on regulations for listed companies and intermediaries, potentially reducing compliance ambiguity in the long run. There were no major intraday policy announcements from the RBI today, but the central bank remains watchful of the currency depreciation. Moving to commodities, prices remained elevated. MCX gold was trading around 1,30,300 rupees per 10 grams, seeing a minor dip but remaining near historic highs. Silver prices on the MCX were hovering around 1,82,000 rupees per kilogram. Crude oil prices saw a slight uptick, adding to the pressure on equity sentiment. Geopolitically, global markets are trading with caution due to ongoing uncertainties in trade dynamics and energy supply chains, which contributed to the risk-off sentiment in domestic equities today. Looking ahead to tomorrow, the technical outlook for the Nifty 50 remains weak as long as it stays below 26,200. The immediate support at 26,000 is crucial. A breakdown here could accelerate selling. For Bank Nifty, 59,300 is the key level to watch. The market is likely to remain volatile, with a bias towards selling on rises unless we see a strong reversal in FII activity. For your actionable takeaway, keep a close watch on the private banking giants like HDFC Bank and ICICI Bank. Their price action near today's lows will likely dictate the market's direction tomorrow. If they stabilize, we might see a bounce. Otherwise, further correction is on the cards. That's a wrap for today. Stay tuned for tomorrow morning's wrap and send in your questions.